What if I told you that in the world of decentralized finance, $500 isn't just a small amount of capital? It's a potential seed for a financial revolution. Imagine walking into a bank today and asking for an internet bond that yields 10, 20, or even 30% while traditional savings accounts struggle to keep up with inflation. Most people wait for the $50,000 windfall to start taking crypto seriously, but the reality is that the most explosive growth often happens in the mid-cap sectors where a simple $500 investment acts as a lever. Today we are putting Ethena and its native token ENA under the microscope. We aren't just looking at a price chart, we're looking at a protocol that is attempting to rebuild the very foundation of money without using a single traditional bank. Join me as I dive into the challenge of investing $500 in Ethena to see if it can actually boost my crypto portfolio today. We are currently in a fascinating window of the 2026 crypto cycle. While Bitcoin dominance remains high, the DeFi Summer 2.0 narrative is gathering steam, and at the heart of it is Ethena. Ethena isn't just another stablecoin project, it is a synthetic dollar protocol built on Ethereum. It introduced the world to USDE, a synthetic dollar that maintains its peg through a sophisticated delta-neutral hedging strategy rather than relying on US Treasuries or fiat in a bank vault. As of late January 2026, the ENA token is navigating a critical accumulation zone. While the broader market has seen volatility, Ethena has been busy fortifying its institutional-grade infrastructure, recently approving Kraken custody as its primary custodian to ensure maximum security for the assets backing USDE. This strategic move from yield at all costs to safety first is exactly why ENA has become a prime candidate for a $500 portfolio boost. In a market where trust is the ultimate currency, Ethena is building a fortress. Is it a coincidence that the world's largest whales are accumulating ENA at these levels, or do they see a supply shock coming that the average retail trader is missing? Every investor faces the same paralyzing question: how do I pick a winner without getting rugged? The crypto market is a graveyard of revolutionary projects that lacked a sustainable economic model. This is where most $500 investments disappear, into the hype of coins with zero utility. To truly boost a portfolio, you need a reliable investment strategy that looks at the real yield versus inflationary rewards. The challenge with Ethena in the past was the sustainability of its yields during bear markets. However, the protocol has matured. Investors today aren't just looking for a pump, they are looking for protocol revenue. Ethena's internet bond model thrives on derivatives funding rates. When the market is bullish, Ethena makes money. When it's neutral, it still captures staking rewards from its ETH collateral. The dilemma isn't just what to buy but how the token captures value. If the token doesn't have a value accrual mechanism, your $500 is just a donation to the developers. Why settle for 5% in a high-yield savings account when the blockchain is offering a transparent, code-based internet bond that pays you for the market's volatility? What makes ENA stand out in 2026? It's the ENA engine. The token has evolved from a simple governance coin into a core utility asset. Through the SENA staked ENA model, holders are now eligible for fee switch rewards. A portion of the protocol's massive revenue is directly shared with stackers. Furthermore, Ethena is expanding its stablecoin-as-a-service model, allowing other blockchains to launch their own synthetic dollars using Ethena's tech stack. The community support is equally robust. Unlike projects that rely on paid influencers, Ethena's growth is driven by total value locked, TVL, and institutional partnerships. In early 2026, we saw a massive divergence. While retail was selling due to short-term price fluctuations, whales accumulated over $20 million worth of ENA in just 48 hours. This smart money accumulation suggests that the market believes the current price is a bottom. When you combine this with the Converge blockchain network launch, where ENA serves as the primary validator staking token, you have a project that is no longer just a DeFi app, but a sovereign piece of financial infrastructure. If the biggest players in the room are locking up their tokens for the long term, are you going to be the one providing them liquidity, or are you going to join the vault? Let's get into the numbers. If you invest $500 in ENA today at its current January 2026 valuation, ranging between 17 cents and 20 cents, you are acquiring roughly 2,500 to 2,900 tokens. To see a significant boost, we look at the roadmap catalysts. Analysts suggest a moderate recovery target of 85 cents to $1.40 by the end of 2026 as the USDE multi-chain expansion takes full effect. In a bull case scenario where USDE becomes a top 5 stablecoin by market cap, ENA could test its previous psychological resistance levels near $2. At $2, your $500 investment would be worth roughly $5,000 to $5,800, a 10x return. Even in a conservative baseline scenario where it hits 70 cents, you are still looking at a 3.5x return, far outperforming traditional assets. The key isn't just the price, it's the staking rewards. By staking your ENA into ENA, you accrue points and airdrops from the entire Ethena ecosystem, effectively lowering your cost basis every single day the protocol is active. Can $500 really turn into $5,000? In traditional finance, it takes decades. In the right DeFi protocol, it takes one successful roadmap execution. Summing it up, Ethena ENA represents one of the most mathematically sound bets in the current DeFi landscape. It has moved past the experimental phase and is now building the internet bond for institutions. By combining synthetic dollar stability with real protocol revenue, Ethena solves the biggest problem in crypto: sustainable yield. Investing $500 today isn't just about gambling on a green candle. It's about positioning yourself in a protocol that captures the growth of the entire Ethereum derivatives market. With the Kraken custody partnership providing a safety net and the Converge network adding massive utility, ENA has the fundamental strength to turn a modest $500 into a cornerstone of a high-performance crypto portfolio. However, remember the golden rule: crypto is volatile and DeFi comes with smart contract risks. But for those looking for a mid-cap project with large-cap aspirations, Ethena is a name that cannot be ignored. I want to hear from you. Are you bullish on Ethena's synthetic dollar model, or do you think algorithmic-style pegs are too risky for 2026? Drop a comment below and let's discuss if ENA is the best staking play right now. If you found this deep dive helpful, hit that like button and subscribe for more portfolio boost strategies. Staying updated with the latest blockchain insights is the only way to catch these moves before they hit the mainstream news. Take full control of your crypto with Ledger Live. Manage thousands of coins and NFTs securely in one place. Buy, swap, stake, and grow your portfolio with ease. Trusted by 7+ million users, Ledger Live keeps your assets safe by integrating with Ledger hardware wallets for maximum security. Say goodbye to third-party risks and hello to true financial freedom. Download Ledger Live now. Click the link in the description to get started. The information contained herein is for entertainment purposes only. Nothing herein shall be construed to be financial, legal, investment, or tax advice. The content of this video is solely the opinions of the channel owner, who is not a licensed financial advisor or registered investment advisor. Trading cryptocurrencies poses a considerable risk of loss. Please use your best judgment when dealing with cryptocurrencies and don't invest money that you cannot afford to lose. The channel does not guarantee any particular outcome.